Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on a couple of big banks. ASB Bank and Westpac have both released their results, or at least an indication of those results, for the June quarter. Firstly, ASB Bank, which has given us their full results. That showed their pre-tax profit fell 2.9%, and that's because of an increase in their loan loss provisions to 40 million from 18 million. Now, this is a relatively small part of their overall loans. Remember, they've got nearly $60 billion worth of lending. And ASB Bank has been quite conservative with its lending. It didn't lend to a lot of property developers or to property investors who put their money into leaky or frankly low-value apartments or townhouses. It was very careful there. And the CEO of ASB, Hugh Borrett, told us that the banks have benefited from a flight to quality out of some of the finance companies into the banks. So their deposits have risen quite strongly. And that has helped reduce some of the damage from a big increase in funding costs for the rest of the world. Remember, ASB gets about 60% of its funding from local investors as opposed to going onto international markets and getting it from there. It has very solid capital backing. 9.4% is its Tier One capital ratio. What does that mean? It means it's got cash and other completely liquid assets put aside to back its lending, and that's more than double the 4% minimum for Tier 1 assets that the Reserve Bank sets. Now, the dividend to the Commonwealth Bank, remember ASB Bank is owned by Australia's Commonwealth Bank, that dropped by $215 million. That's actually good news for New Zealanders because that means Commonwealth Bank has pumped a little bit of extra profits into the capital backing for the bank. Now, Westpac actually came out last Friday and said it had increased its loan provisions in the June quarter by $60 million. And 44 million of that came in mortgages, and it's seeing a slight uptick in the amount of past due on its mortgages. One to watch to see how closely the banks are exposed and how much damage they take from a slowdown in the property market. You have to say though that our banks are much more solid than the ones in the US and in the UK. They got heavily exposed in subprime lending, and also our banks are very closely monitored by the Reserve Bank. They have to keep a lot of capital aside just in case we do see a slowdown in the market. I'm Bernard Hickey. That was a special report on a couple of big banks for interest.co.nz.